lots keeping the market busy as we head into the final month of the year. On the currency front, what are you making of the Central Bank of Kenya's intervention in the market and its insistence on the need to build up reserves as opposed to the need to weaken the currency?
Thank you very much, Alishia. I'm always glad to be here. Well, that's a good observation there about Central Bank, and basically looking at how Central Bank has been taking its approach in terms of the economic environment as well as in terms of the macroeconomic balance. The step by Central Bank to be able to try and see how you can be able to keep the foreign exchange stable, especially at a time like now, is very welcome because you're going to be able to encourage a lot of the import-export as well as activity, as well as also trying to stabilize in terms of most of the business, especially as we go towards the close of the year.
For now, we've seen that weakness in the local unit impact quite a few businesses. And as I mentioned earlier, it's Ever Ready that sits amongst them. Profit warning. It's announced that its financing costs had increased due to the depreciation of the Kenyan shilling, and that one of the factors hindering its performance at this stage. To what extent is this becoming an issue for Kenyan companies?
Well, thank you very much, Alishia. Well, looking specifically at Ever Ready, the problem that it seems to be affecting that company has been something that has been very much expected in the market, especially looking at the fact that its position in terms of production cost, in terms of the market availability for some of the products that it has, and also cheap imports, has really significantly affected their performance. Looking at it in terms of foreign exchange, it might be a bit beyond their control because looking at it in terms of the macroeconomic approach, well, looking at the stability situation, it might be needful of them to be able to see whether they can take mitigating factors against such things that could be beyond their control. But in terms of the performance of the company, it's a challenge for them right now to see whether they can either diversify or see how they can be able to still get a bit of market in terms of the product that they are offering.
Of course, we saw a rise in global zinc prices, another issue that this company has had to contend with. Are we really looking at limited scope for this company to pass on some of these costs to the consumer? Just how restricted is the company in terms of pricing power?
Thank you very much. Well, looking at it in terms of pricing, yes, definitely Ever Ready does not have a lot of power in terms of the market situation as it is, because looking at it in terms of the situation in the country, the demand for some of the products that it has, Ever Ready batteries and those kind of things, has really significantly declined because of either cheaper imports, rural electrification, which has also decreased demand for some of these products. And because of that, the challenge for the management as of now is to see how they can reduce their costs in whichever way they can be able to do that, as well as diversify.
Well, let's look very quickly at Safaricom. Yesterday, it opened the second tranche of its 5-year medium-term note worth 4.5 billion shillings. The bond on sale for a fortnight from today, as I was saying earlier. Has there been any mention of pricing just yet?
Well, looking at it in terms of the bond offering, well, first of all, it is a welcome move, especially for Safaricom, because looking at the liquidity that we are seeing in the market now with the interest rates declining and there are a lot of liquidity that's around there, we are seeing the KPLC rights issue. Shareholders seems to still, or the market seems to still have a lot of liquidity for people to take up. And looking at it in terms of the placing of these MTN, we're looking at it from this point that they have been able to be very careful in terms of strategic placement. It might be able to still attract a lot of demand in terms of interest, because it is still well positioned, and I'm sure they're going to be able to still encourage investors to see the opportunities thereabout.
Of course, they're on this aggressive capital raising initiative as they embark on further expanding their portfolio in terms of an emphasis on data specifically. What's your view in that context on Safaricom right now? Buy, hold or sell?
Well, Safaricom has been one stock that has created a lot of love and hate, especially looking at its performance over the recent 2 years plus. Looking at it in terms of as a stock, well, the future potential of the company is a bit of a concern right now because of the price wars, but in terms of their strategy, which has been fairly strong, and how they have been able to come out recently with a very, very strong advertisement move, and as well as upgrading their systems like M-Pesa, we've been seeing them trying to ensure that they provide efficient services to their clients. It is a long-term consideration for a stock for buying, but in terms of the short term, it's a bit shaky.